Hello friends, welcome back to part 11 of my Tesla earnings forecast video review series. I'm going to have to start covering more tweets per video or else I'm not going to make it. Tesla's going to be reporting the actual production and deliveries before my series is over if I'm publishing one video per day. So I got to step on the accelerator here if I want to get through all of this before the 2nd of October when that information is expected. Loki has calmed down since the end of the previous video when he was really upset at some noises he heard outside. But I'm going to continue the tour from here. So for part 11, let's start with tweet number 13, and we'll cover a few of these before the video ends. In the previous chart, we excluded regulatory credit sales. What's a regulatory credit, I hear you asking? Well, I have explained it some in the previous couple of videos, so I shouldn't repeat myself. I'll just read this caption here and say it's money Tesla gets from competitors who did not make and sell enough EVs to comply with applicable law to avoid paying the government even more in fines. I mean, it is kind of an unusual business situation, but I'll say something I haven't said yet in this video review series, which is it's a level playing field. Everybody knows what the rules are in advance, right? So nobody ought to be complaining that they have to buy regulatory credits from Tesla because they knew years in advance what the rules were going to be for how many electric vehicles they were expected to produce and sell. And if they didn't want to have to buy regulatory credits, they should have made good EVs. Which is the point of the law, right? The law is there to tell all the automakers, hey, you guys have to get serious about making good electric vehicles that people will want to buy. Because if you don't, you're going to have to pay companies that are doing that some of your money. So you're going to be assisting your competitors by giving them some of your money if you don't comply with our laws that say you need to produce and sell electric vehicles. Okay, so what's this chart show? It's just the raw dollar amount, the revenue dollars. These are in billions. So you see the highest number here was over 0.6 billion. So that's over $600 million worth of regulatory credits from Q1 of 2022. I think there was a change in the law, maybe in China, that allowed Tesla to take more value from regulatory credits they had sold over the previous year, something like that. But yeah, it's funny. Back in 2020, the chorus from the haters, the short sellers, the trolls, the skeptics, was, oh, regulatory credits are going away right away, so next year there won't be any regulatory credit sales. And then since they said that, 3 of the top 3 regulatory credit quarters ever have happened, including Q4 of 2022 and Q1 of 2023, so pretty recently. And just because this is what I'm forecasting for future quarters, that doesn't mean there can't be more record highs, right? Tesla could declare a lot of regulatory credits from one quarter to the next. You can see how volatile it's been over the years. It's one of these big wild cards where we don't know to expect a big amount to hit because Tesla doesn't provide guidance that we can use to slot into our forecast and expect stuff like this. You know, from this high to these lows. We don't really know what to expect, and maybe part of that is because Tesla doesn't know what to expect either, because the market for regulatory credits itself is volatile. They don't know how much people are going to be willing to pay for regulatory credits from one day or week to the next. Who knows how that business works exactly, but I did want to put the numbers on a chart just to help people see what the regulatory credit sales look like over time, and that my expectations for the future aren't nutty, especially since these are just the raw dollars. Tesla's going to be selling more and more vehicles over time, so these regulatory credits per vehicle are actually being forecast lower on a per vehicle basis than in the past when Tesla was making a lot of regulatory credits per total delivery. That's one of the things I wanted to cover in this tweet. Let's go to the next one. Tweet 14 from my thread. I admit I sometimes even confuse myself with the x-axis labels on the next two charts because the data is shown on a next 12 months basis. So these labels are telling you how much I expect the non-GAAP EPS to be over the 4 quarters that follow the quarter that's labeled. So as an example, I said the $3.97 above Q3 2022 actually shows my forecast for the 4 quarters that follow. So already 3 of those are actuals, but the 4th isn't. And that makes this a forecast, which is why it gets a large circle indicating this is not an actual yet. It's probably going to be something close to $4, but we don't know exactly what the amount's going to be yet, like we do for all these previous smaller circles on the chart. And then I am forecasting that to increase a little bit. Loki gets fired up when he talks about non-GAAP EPS on a next 12 months basis. Why is it a next 12 months basis? Because that's what investors care about, is what have you done for me lately and what are you going to be doing for me soon? Is the EPS expected to increase soon? And I'm sorry to report that we're going through a bit of a bear market right now, and interest rates are high, and those are the primary reasons why Tesla had to cut prices enough that the earnings aren't going to be growing by a lot in the near future, or I don't expect them to. They could decline some from here. I mean, I am forecasting them to decline 2 cents. You can call that flat. So on this other chart, it's exactly the same except with a logarithmic y-axis. I mentioned here in the caption, Shanghai lockdowns in 2022 closed Tesla's most profitable factory, and Tesla started ending the wave mid-year. Then there were price cuts and promotions toward the end of 2022, and growth will resume any day now. So at some point the growth will resume on Tesla's non-GAAP EPS, but it is taking somewhat of a breather right now. You can see this line has been pretty flat over the past several quarters relative to the kind of growth that we saw from 2019 through the end of 2020. Then there's been a lower growth rate through the year that's labeled as 2021, but the next 12 months happened the following year, 2022. Yeah, it's maybe not the most intuitive way of graphing stuff, but next 12 months. There you go. Quickly moving on from those topics, let's talk about a different kind of chart that's easier to understand. This one underscores the point I made on my adjusted EBITDA line chart. Apart from volume, my forecast for future years' earnings growth is largely driven by more buyers opting to pay for FSD at premium pricing as its features improve. But it's tricky to guess at timing. So you can see the same kind of pattern shown on this chart that we saw on the adjusted EBITDA chart, which is pretty low numbers for a long period of time. But over the next 2 years, a lot of growth expected. This is average full self-driving revenue at time of purchase per delivery. So there are a couple of different kinds of full self-driving revenue you can have. You can have the kind where you configure it with the vehicle when you buy it, or you can have the kind where you do an over-the-air upgrade later by buying the full amount, or you can subscribe to full self-driving. So this is just the piece that I think people are going to be buying with their new Tesla purchase, and I've got that increasing by the end of 2025 to be more than $10,000 per vehicle, because by that point, maybe full self-driving will be so compelling and have such high public awareness that a lot of people purchasing a Tesla are going to be purchasing full self-driving. That's what that says. It's an assumption that's in my forecast that I wanted to let people know about. I'm not expecting flat full self-driving revenue per vehicle. I am expecting a lot of growth, and that's where a lot of the earnings growth is going to come from. So I do have time to cover one more in this video. I'll say here's a handy resource I created last year to show the Tesla haters, skeptics, and trolls who were telling everyone the growth story is over last year. They were saying deliveries are never going to increase. Tesla will never have another record delivery quarter. Then Tesla broke all-time quarterly delivery records in Q4, and again in Q1, and again in Q2. So the format of this chart was intended to ridicule people back here in Q3 of 2022 who were saying that's the highest number. 343,000 is the most deliveries Tesla will ever have. So imagine this dotted line down here, and you can see that every quarter since Tesla has beaten that dumb expectation that that was the peak, that was the demand cliff, the growth story is over, right? Now that we've set 3 more records, I think it's okay for Tesla to take a little step back in Q3 of 2023. You can see not every quarter has been a record since 2018. There's been a bunch of times when deliveries have sequentially declined. That didn't mean the growth story was over. That didn't mean there was a demand cliff. It was just particular to the circumstances at the time, right? This one in Q2 of 2022 was driven mostly by the lockdowns in Shanghai, that quarter that closed the factory for 4 weeks and then made them run at limited capacity for another 4 weeks. But there has been a record quarter every quarter since. So it's perfectly fine for Tesla to have one that's only the second highest ever here in Q3. So that one might fit in this dashed box, but I don't think Q4 will. I think Q4 will be another all-time record high. And that'll be the end of this video. So with that, I will check back in with my co-host Loki, who is alert and up. And I'll say, if you've enjoyed this video, remember to click the like button on whatever platform you're watching. That really helps more people to be able to see these videos. And thank you to everyone who supports me on YouTube or on Patreon or by subscribing to me on X. Especially my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.